things you need to think about. Am I ready to buy a house? Well, first of all, do you have a steady income? In the mortgage industry, you know, there used to be a rule that said you had to be on your job for 2 years. That's not necessarily true. They want to know what you've done for the past 2 years. I mean, a college graduate getting out, starting a brand new job, that's perfect. That 4 years of college is like 4 years of employment history. If you switch jobs 3 times in the last 2 years, that's not necessarily bad, as long as you're always working and always gainfully employed. So that part of the underwriting process isn't as strict as it used to be. Do you have a credit history? That is really all important. That's probably the most important thing that we need to talk about here today, and that's really always the most questions we have too. Do you have the ability to make mortgage payments every month? We look at certain debts when we figure your debt ratio. We do not look at things that you probably look at first, like what do I have to pay my heating bills, my cell phone bill, my cable bill, my car insurance. All of those things we don't even consider. We consider anything that shows on your credit report when we figure these debt ratios. And then, do you have the money saved for a down payment and closing costs? And that's sort of important because the days of zero down loans are sort of gone. A pre-approval is where Carla and I will ask you for the documents. We want to see your pay stubs. We want to see your W-2 forms. We want to see your savings account statements to make sure you really do have some money saved up. And then we work backwards from that, and we figure debt ratios, and we sort of come up with a maximum house payment we feel you'd qualify for. We also run your credit, so now we see your credit scores. We see if you need to work on them or if your credit scores are fine. Depending upon what type of loan you do, which we'll talk about later also, credit scores are very important, and also down payment is different there. So that's the difference. You want to do a pre-approval before you start looking at homes. And I get calls all the time from people who say, we're thinking about selling our existing house. We've been in it now 18 years, and we're thinking about getting a little bigger one or something. But we want to know, how big can we buy? How much can we afford? And that's perfect. We do that all the time. There's just like one more step in it for us, and that's to figure out, if you sold your house now, how much cash would you walk away with? Because that'll be your down payment on your new one. And that's sort of hard to figure these days, because what can you sell your house for? This is one of the important 3 things we look at. When we pre-approve somebody, we basically look at debt ratio, credit score, and assets. Do they fall within the guidelines as far as debt ratio goes? Do they have adequate credit scores, and do they have sufficient assets to buy this house? Down payments, closing costs, prepaids, things like that. Debt to income ratio, your monthly debt payments, is your monthly debt payments compared to your monthly gross income. So we'll use gross income, we don't use net. We actually even use gross income before you take your 401k deduction amount. So on your W-2 form, you'll see a higher number, and then taxable wages is always lower because you might have contributed $4,000 that year to your IRA. We use the higher number. Again, pretty silly, because you don't spend your gross, you spend your net, and that's why you'll go home and take your net take-home pay and subtract out your cable bill and your utilities and all that stuff. But your housing ratio should be somewhere between 28 and 30% of your gross monthly income. So that's one thing we start with. We take your total combined gross income and take it times 28% or 30%. Somewhere in there is what your housing payment should be. That housing payment should include the principal and interest on the loan payment, the property taxes,